Hi everybody, it's FIBO Group, and you are watching to the Market Watch review. World shares were mixed Thursday due to persistent concerns about slowing economic growth. The latest U.S. Federal Reserve minutes also confirmed that it intends to tighten its monetary policy rapidly. Wall Street rallied in the following minutes, but the mood was quieter in Europe and Asia. In morning trade, the Pan-European Stoxx 600 equity benchmark climbed 0.2%, while MSCI broadest index for Asia-Pacific shares outside Japan dropped 0.3%. After Wednesday's rally, the S&P 500 and Nasdaq futures on E-minis dropped 0.1%. The dollar index was flat at 102.06. The dollar index was at 102.06. On signs of tight supply, crude oil continued its cautious rally with U.S. crude at $111.11, up 0.7%. Spot gold fell 0.3% to $1,847.3 an ounce. Asian Pacific market. Asia's blue chips in China rose 0.3% to reverse earlier losses. Investors fretted about signs of slowdown, but found comfort in Premier Lai Keking's comments on stabilizing the ailing economic system. The Australian Bureau of Statistics released data on Thursday showing that private capital spending fell by 0.9% in March quarter compared to the previous quarter. This was well below the forecast of 1.5%. All risk-sensitive currencies, like the Aussie and Kiwi, were trading flat against the dollar. The Japanese yen continues to fall. Market of Europe. European markets rose modestly on Thursday thanks to energy shares and the U.S. Federal Reserve staying true to its monetary tightening policy, with sentiment still fragile. Investors are concerned about the possibility of a global economic squeeze as the European Central Bank will likely begin its hike cycle in July. The single European currency is on the rise and is poised to test the resistance zone at 1.0750. For a holiday, some European markets, such as those in Sweden, Finland, and Switzerland, were closed. Market of America. All participants at the Federal Reserve's May 3-4 policy meeting backed a half percentage point rate increase to combat inflation, minutes of the session showed on Wednesday. Paul Donovan, UBS Global Wealth Management chief economist, said that while the minutes were consistent with a variety of policy options, a slower pace for tightening seems to be the best course. Another piece of news is that a digital version official U.S. dollar could be used to help maintain financial stability, according to Lael Brainard, Federal Reserve Vice Chair. At the moment, all eyes are on Thursday's Commerce Department publication of its second take at first quarter GDP. The Canadian dollar remains within a range. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.